Stock bounce might be coming, says the market breadth. The put-call ratio and the advanced decline line, we're going to analyze it. And gold is oversold while dollar is a bit overbought. Let's see who wins. We will answer a question from a viewer. Is wheat and soybeans going up or down? We'll look at that. And is Bitcoin weakness an opportunity right now? We will answer that as well, or at least attempt to. All this and more in today's edition of MasterChartsTrading.com. Market recap for Friday, August 18th, 2023. As always, don't forget to hit the like button, share this video, make a comment if you have any questions. These actions are what keeps this channel going. Please don't forget to do them. Thank you. If you are not yet a subscriber, consider signing up by going to the link in the description. My website is called MasterChartsTrading.com, and I have two products and one product bundle. And stay tuned until the end for the features of those products. If you're not yet a subscriber, then also consider signing up. We will be going over a whole bunch of various stocks. So we'll be covering many stocks in the members only video. Looking at S&P 500, so as I was pointing out for the past few weeks, we are obviously making a corrective move. Right this instant we are below this green support resistance line. Again, you can find out more about those lines by going into the description. Those are my proprietary indicators. So notice that we have dropped on 16th of August, we dropped below that level, and today, so we're below those levels for 3 days now. So the first support in a strongly moving or strongly trending upward security just means that we're a little bit oversold. If we continue lower towards this blue support resistance line, then we will be significantly oversold. And for my personal taste, I like to see a deeper correction before I jump in. So ideally, for me personally, I would be buying around the blue line. However, as I'm about to show, using the various market breadth indicators, we are already oversold pretty significantly. And as a result, I think we will at least have a bounce. I don't know how big it is. Maybe it will carry us to the next fresh 52-week highs. You know, here is 52-week high on 27th of July. Maybe it will be just a small bounce, and we'll, again continue lower, and maybe we'll retest this blue support resistance line. So once again, the blue support resistance line is significantly oversold levels, and it is about 4.5% away from today's prices. So I'm about to start showing you various market breadth indicators. First of all, you can find out more about them by going to StockCharts.com. I'm not making them up. They're pretty much available. So I'm going to be talking about advanced decline lines, and I'm also going to be talking about put to call ratio. And you can find out more about those on those sites. So on the site. So let's look first at the advanced decline line. So advanced decline line is constructed using advancing stocks or advancing issues, they're called, because on New York Stock, this is New York Stock Exchange. Many things are traded in addition to stocks. There's ETFs, there's closed-end funds, there's all kinds of other securities that are traded there. And we can construct what's called an advanced decline line. So what we do is we take issues or stocks that are advancing, going higher, and from them subtract declining issues. There's also unchanged issues, but let's not worry about them right this instant. So if we take, let's just say that today, 1,000 stocks advanced, and then another 750 declined. So we're going to take advances minus declines. It'll be a number 250, right? And so yesterday, for example, 1,500 stocks advanced, and out of those, and then also, 250 declined. So we can subtract that number. So it will be 1,250. So what we'll do is we'll take yesterday's number and add today's number to each other, and then continue doing this as we go forward. And we will construct what's called an advanced decline issues line. In this case, we will take the actual number. So we will just take advances and declines, and we will not add them together. We'll just use them as is. But we will put a 10-day moving average. So this graph here, this jiggly lines, shows a 10-day exponential moving average of just a raw number of how many stocks advanced minus how many stocks declined. Okay. Down below here is S&P 500. What was it doing basically? So notice that this is an oscillator. So oscillators go, there's a zero in the middle, and it just oscillates up and down. And it's unbounded oscillator. So technically you can go as high as you want, but I mean, there's only so many stocks that are traded on New York Stock Exchange. I think, I want to say like, I don't want to lie, but maybe like 7,000. So let's say 7,000 of stocks advanced and zero declined. So theoretically, you can have this number of like 7,000. And opposite is also possible, where every single one of those stocks declined and zero advanced. So you can have like a negative 7,000. Don't quote me on that number. I don't exactly remember how many stocks traded on NYSE. The point here is that we're taking just a 10-day exponential moving average, because if we don't, then you will see that it's very difficult to visualize. Yeah, it looks kind of like that. So every day is 1 point, and you can see it's just a scatter plot basically. So we don't really want to care about that. And instead, we just want to concentrate on the 10-day exponential moving average. So notice on this plot here, I drew a line at minus 600 and plus 600. So it's not necessarily arbitrarily. It's just a good kind of reading to see what is overbought and what is oversold. So oversold, I'm going to say that the 10-day exponential moving average of the advanced decline issues on New York Stock Exchange Composite is going to be minus 600. All right. And if we look on this chart, this is going back, a year and 3 months. So for example, right here in June of 2022, this number that I just described to you dropped below this minus 600 number. And then more or less around that same time, maybe a few days later, we had a rally started. Okay, so that rally started from mid-June of 2022 and continued into late August 2022. Then again, sometime later on in August of 2022, it dropped below this minus 600. We had a tiny little rally, but it didn't really last, and then we continued lower. So again, notice how deeply oversold this level was. We got to minus 1,400. This is a very oversold level that happened in September of 2022. After that, a significant rally unfolded, all right, into December of 2022. So notice that more or less, it doesn't happen every single time, but more or less when this number becomes significantly oversold, we get a rally, okay? So a latest example of this rally occurred in March of this year, 2023, when this number dropped below this minus 600 level around March 13th of 2023 this year, and then we had a very significant rally for S&P 500. The opposite is also true. If we go overbought, if we close above this red support resistance, above this red boundary of plus 600, then more or less every time we will get a correction, or at least corrective action. Does it happen every time? No. Okay, but it's a decent indicator, and it can be used in conjunction with other things. So right this instant, yesterday on 17th of August, this number was actually minus 740, so it was pretty significantly oversold. So my point is that we are now pretty significantly oversold from a market breadth perspective. This is called market breadth. How broad is the advance? How many stocks are advancing? How many stocks are declining? So from a market breadth perspective, we are definitely oversold. From my perspective, from the indicator's perspective, yes, we're somewhat oversold. We're not as deeply as I want to be oversold, but we're definitely oversold. Okay, just like mildly. All right. We're going to go take it a step further. We're going to look at another measure called put-call ratio. All right, you can also find it on StockCharts.com. I'm going to briefly explain what this is. We're going to take, this is CBOE, Chicago Board of Options Exchange, options total put-to-call ratio. So basically how many puts are present each day on the market, and how many divided by how many calls are there each day on the market. Once again, we're going to construct a line, and I'm just going to show you what it looks like. It's also going to be basically like a scatter plot. So yeah, it's going to be a scatter plot. You can see those dots, and each dot represents a day, 1 day. So for example, a few right there on 16th of August, we had a huge number of puts, just in absolute number right there. I'm gonna turn off this overlay. See right that right there? We had quite a bit it's an outlier. We had quite a bit of puts. All right. Now what I did is I took, instead of having those dots to kind of blur your vision, I just got rid of them altogether, and instead I once again made it into a 10-day exponential moving average. So this blue line, this oscillating line, is 10-day exponential moving average. Okay, I went a step further and I put these lines on the chart, this red, green, and then the center line. These are what's called Keltner channels, so you can also look that up. Keltner channel puts a line, a certain number of, it's not a standard deviation, it's called average true range. So how far is the price action from the middle? So we're putting this green line 1 average true range away, and we're putting this red line 2 average true ranges away. All right. And I took a very long one, it's 250. Why 250? Because there's 250 trading days in the year. So there's that line. So we constructed the line, and now we can say, okay, is it overbought, oversold? What is it doing? So if we, I'm going to correct this slightly. Yeah, there we go. How to read this? How to read this plot? So think opposite. When there is too many puts, more puts, you can expect a rally. This is opposite. So when the sentiment, this is sort of like a sentiment measure. If the sentiment becomes too negative, people will step in and start buying. Vice versa, if there's too many calls and the sentiment becomes too positive, the bears would come in and start selling. So when there are too many puts, think that we're going to get a rally. Too puts means we're going to put just means that people are placing bearish bets. People think that the stock market will go down. When people are buying calls, that means that they're placing a bullish bet. That means they think the stock market will go up. So as a sentiment measure, it does the opposite. So notice that, for example, very recently we had too many calls. right? I pointed this out in like in late July. I said we have too many calls, too many bulls in the room. Expect a correction. We definitely got that correction. We are correcting right this instant. So like I was saying, sometime in late July, we were saying that we had too many calls. This is late July right here. We had too many calls. We got a little correction. Right this instant, we have too many puts. All right. There's quite a bit of puts. Look, we're approaching this upper red line. Okay, so that means we have more puts. And in the past, if we have more puts, think opposite. People think too many bears in the room. Too many bears in the room. That means we're going to get a rally. Okay. So, for example, this happened here in early 2023. We had way too many puts. Way too many people were having bearish thoughts. We got a rally into February. The opposite happened. We had too many calls sometime in late February, and we got a correction. Okay. Now, it's not a perfect indicator, because notice that, objectively speaking, here in March, there were not that many puts or that many calls. There were slightly more puts. People were slightly bearish in March, but we got a tremendous rally. Okay, so that's why I want to kind of point out that we can use market breadth in conjunction. So, for example, advanced decline line, the 10-day EMA of the advanced decline line here in March was definitely oversold, and we definitely got a rally. Okay, so the put call ratio in March was somewhat oversold. Okay, but the advanced decline line was definitely oversold. So perhaps, I mean, some of you maybe already, have a light bulb goes on in your head, in your brain. What if we take create a system where we're going to assign a value to our indicators? For example, we'll take put call ratio and assign it a certain value. If a put call ratio is at this level, we're going to say that we're going to be anticipating a rally, for example, right? Combine it together with advanced decline line, combine it with my oversold, overbought, and support resistance indicators. There, you already have a system, right? So right this instant, I'm looking at put call ratio, and puts are definitely overextended to the upside. So we have more puts. People are quite bearish, significantly bearish. I mean, they're at this red line already, right? Back here in March, we had people were somewhat bearish, and we got a huge rally, right? So think about it. Right now, people are thinking that we're gonna collapse into nothingness. Well, almost. This is here in the beginning of 2023. This is the end of the world is coming. All right. Of course, the end of the world didn't come, right? But we're pretty close to that level, and we just corrected a little bit. This is what people think the end of the world will come. We corrected 5.5%. Okay, so this 5.5% is now, people are thinking this is the end of the world. Okay, so right now put call ratio is calling that at least a bounce most likely will materialize very shortly. We're seeing the same goes for advanced decline line. Advanced decline line is oversold, meaning that very likely there will be at least a bounce. It happened every single time before. Okay, notice I just showed you a bunch of those instances. So taking this all together, I think either we'll see a bounce right this instant, and we might actually challenge this previous 52-week highs, or maybe we'll get a very tiny bounce and then we'll continue down. But at that point, we will become deeply oversold, and most likely both of these indicators will be even more oversold. All right, so perhaps we will see a significant rally in the not so distant future. What do you guys think? Leave a comment. Perhaps you're interested in working together to create a trading system, but I think this is already an workable way to objectify trading. So, we can assign numbers, we can assign values, and then as a result, we can make more educated decisions of what to do with stocks. Switching gears completely, we're now looking at dollar currency index DXY. So dollar currency index until very recently, actually still, I think it's in a downtrend. So dollar entered a downtrend on January 12th, 2023 of this year, where when it closed below this red support resistance line. So this is the way I define forex like instruments. So for example, gold, dollar, various forex instruments, I would trade them between the blue and the red lines. So it has entered a downward downtrend, and so we sell them short. We sold it short and close below this red line. We actually made a new 52-week low following a recent support break below this is a February 2023 lows. We broke below them on the 12th of July, but we didn't go further. All right, we're now in the middle of we just made 1, 2, 3, 4, 5 straight weeks up for dollar. Okay, pretty significant rally if you ask me. We are also approaching this red support resistance line, and in the past it has proven to be a very good place to sell dollar short. Where are we going here? So notice this rally from the lows in April rather, into May. It kind of topped out midway between this red and yellow lines. Okay. This time, could we get to the red line? And if we get to the red line, would that be an opportunity to sell the dollar? I think yes. Ideally, we should see something like a top-in pattern of some sort, and then a close like what we had, here, for example, in March of 2023. Kind of like we tried to get above it. We just kept, like, for example, there's this top-in pattern on the 8th of March. There's this top-in candle looking like it's tried to get higher, but I think this is called the evening star, possibly like an evening star. And then we close below the red line. That's our trigger right there on the 13th of March. Okay, another good trigger right there on the 16th of March. So right now we're sort of in between. We're not really overbought. I mean, we're somewhat overbought, but we're not that overbought that I would be like, yeah, let's sell it. Oh my God. Okay, no, we're not there yet. So dollar, why do I spend so much time? Is because we do trade gold, XAU divided by US dollar. US dollar, the bottom part of this equation, has been getting stronger, bigger, so it's pulling this currency pair lower. Okay, so notice dollar bottomed out in July here, and then gold kind of topped out here in July, and it's been selling pretty steadily since then. Previous bounce did occur at my blue support resistance line. That line is around 1900. I think it's a hugely important level for gold, 1900. We're currently just below it. Notice that we dropped below it yesterday on the 17th of August, and today on the 18th of August we tried to get above that level. So far we have failed. So if I'm correct, and dollar is not yet done with its correction, with its counter trend rally. All right, so trend is down and we are rallying up. Okay, so I think dollar has about 1 to 2% to run higher, which would translate in more losses for gold. So ideally, we shouldn't get below this red line, which is at 1784. So when or if we get below that line, which is about 5.5% from today's prices, I would start thinking that we're in a downtrend for gold. And in that case, I don't want to be buying it anymore, right? So we will see what happens in the next few days. If dollar continues to rally, but ideally, once again, if it gets to this red line, it should top out, kind of like what happened here, which it just topped out and then sold off. Okay, in that case, no questions asked, we need to be buying gold. But right now, I want to wait and see, because what if it continues lower and continues to below 1784, which implies that Federal Reserve was indeed successful in fighting inflation. What do you guys think? Make a comment. Also, if you have any questions, please leave them, and I'll try to get to them. Okay, so subscriber, or rather one of the viewers asked the question, what do you think about wheat futures and soybean futures? I don't trade them, but we can look at them. The symbol is ZW1 exclamation point, and these are continuous wheat futures. I am not sure what this number is. It's like 639, I'm guessing, dollars, but for what? It's for some sort of a unit of wheat. Okay, so wheat has been in a downtrend. It did spike. This is the beginning of I'm sorry, this is March 8th, 2022 here. Russia invaded Ukraine in February 24th, right there, 2022. So a few days later, wheat spiked pretty high up. Now, as you may have heard, there was, for most of the, up until actually quite recently, there was what's called a grain deal between Russia and Ukraine, whereby Russia will allow Ukrainian grains to be exported from Black Sea ports of Odessa. But very recently, the Russians decided to pull out of the deal, and now there is all kinds of things going on in the Black Sea, if you haven't heard, where Ukrainians are hitting actually Russian ports now. So the way wheat is reacting, it's not that reactive, I guess, but you can see that at least right there on the 31st of May, there was an attempt to collapse the prices lower, but it pretty much got rejected. So I don't think lower prices are going to be anytime soon. Also, just actually yesterday, on the 17th of August, wheat attempted to get to those levels, but today actually price went up with a gap higher. So looks like there is a floor below this level for wheat. Now, additionally, if you look at this chart, notice on this chart my indicators. So notice how, for example, until very recently, the distance between the two, between the yellow and the green line, was significant. It was like 420 points or so. Right now, the distance is only 240 points or so. So that means that the trading range has narrowed. We can also project the indicators into the future, but there's not much happening. We can see that a little bit more of a narrowing of a trading range. So the trading range does narrow when we have a potential trend change. So if things continue the way they are, there is a potential trend change for prices to go higher from here, especially if the price continues higher from today's levels and gets to this all-important blue line, which is currently at 808, whatever that number is. So if we get to 808, I think we could spike significantly higher to, like, maybe 1,000 or so. So perhaps there is more supply disruptions in the cards for wheat futures. Looking at soybean oil, again, I don't trade it. I don't know how much, what is this for, so to speak. I guess it's per pound. Okay, I see. So it's something, yeah, per pound. But how many pounds? Yeah. Whatever that number is, we don't really care. We don't really trade it. But yeah, if you look at the soybean oil, same thing. We sort of bottomed out here in May. Wheat also bottomed out here in May. So Notice the prices significantly increased. They were at around 40 and now we're at around 64, and they're approaching this blue support resistance line, meaning that yes, once again, a breakout above the blue support resistance line would imply an uptrend for soybean prices, and they could continue higher into the future. Excuse me. All this, in my mind, means that there is more supply disruptions in the Black Sea, because Russia also exports its oil, actually crude oil, and soybean oil, and all kinds of agricultural products via Black Sea ports, and then eventually it goes to through Bosphorus and into Middle East, etc. So yes, potential for supply disruptions are there for agricultural products. And let's finish up today with Bitcoin. So Bitcoin, I think, is on an uptrend. Notice this again, up arrows for Bitcoin. When we close above this blue support resistance line, this means that this is a good opportunity to buy. We had pretty good opportunities to buy. Now, latest selling was very precipitous, like just one day, boom, collapse. Pretty big collapse here. In one day we dropped like 7%. So notice where we dropped to. We dropped exactly to my blue support resistance line. It's around 26,000 right now. So let's see what happens around here. But I mean, this is a significant drop, so maybe we'll see more downside. Now, unfortunately, if we get to this red support resistance line, which is at 22,000 or so, that would also mean a new downtrend for Bitcoin. And we had downtrend for Bitcoin in the past. Notice downward facing arrows back in 2022. So if you shorted Bitcoin back then, you came up, sometimes 60%. Like for example, this short signal where I'm hovering, back in April 2022 was good for 60-some%, right? Currently, Bitcoin is in an uptrend. So what we need to do is we need to see a kind of like a bottoming pattern here, and then a close above this blue support resistance line. And at that point, so something like what we had where I'm hovering on the 15th of June, we had a low below the blue line, close above it. That's where we would be buying, and then a nice big rally. So let's see if this something like that happens again. All right, thank you for watching until the very end for me, this video, and head over to MasterChartsTrading.com, click on sign up for one of the products. So I have trading indicators, which you can see on this chart. These pretty much you can trade anything on any time frame. So for example, I'm going to look at Bitcoin on 5-minute chart and see, well, let's do a 1-minute chart. Okay, so for example, on this chart, we would have been, selling it short, like right there, where the red line is, and for example, right there where the red line is, and we would have been correct. Okay, so you can trade pretty much anything on any time frame using my indicators. I prefer daily charts, but you can trade on any time frame. Also, I have a newsletter. So for newsletter, we usually look at stocks. So for example, for this newsletter, I have quite a bit of various securities that we're going to cover. I usually cover some commodities that I don't cover in a big video for the YouTube. I also cover ETFs, foreign ETFs, large cap stocks like Tesla, Nike, as well as a whole bunch of various speculative securities like Airbnb, Cloudflare, Skynexus, Sana Biotech, the Real, etc. So if you're interested in that, do consider signing up. And of course, the best deal is to get both trading indicators and my newsletter at $59.95 per month. I think it's a great deal. You also get 7-day free trial. Please don't forget to hit the like button, subscribe to this channel, share this video with others. And again, thank you for watching and have another great trading week. Bye-bye.